Welcome to Markets Now. I'm Michelle Rook with DuWayne Bosse at Bolt Marketing, and we're seeing mostly higher prices this morning in grain and livestock futures trade. And the grain market, let's start out there, DuWayne, because especially corn and soybeans, we saw very strong exports this morning. In fact, I think these weekly exports on corn were some of the biggest since like 2021. And so is
Right.
that really what's driving this higher market?
I think so. I mean, and you look back a couple of weeks ago, the market was maybe kind of trying to tell us something. We were getting bull spread in the market, which didn't make any sense to me or most other brokers either, because we got this huge crop we're harvesting, right? So we shouldn't be bull spread and the basis looks strong. Well,
Right.
evidently there was some export demand coming, and you're right, it's huge export demand, mostly from Mexico, which the market doesn't get super excited about because that's our normal customer. China was on the books this week, but it was just a very small little purchase. So all this is being done without China, which you can look at bullish or bearish, I guess. If they would come in, then we'd really maybe have a fire going here.
Yeah, but a weekly sales total of almost 142 million bushels. So that is big. I know you think metric tons, but
That's all
most
right.
producers can't wrap that around their head.
No.
So let's talk about corn, though, as well. From a technical standpoint, corn itself is
Yeah,
now, after yesterday, above both the 50 and 100-day moving averages. Can we keep
right.
going here, and do the funds help us?
Well, that's the ultimate question here. So right now, the chart looks fairly bullish. I'm kind of impressed with this market from a technical standpoint. But you mentioned the funds; they were heavy sellers in last week's commitment to traders report, which of course was from the following Tuesday, right? That made me nervous because the funds are basically what I would call flat the market. They can do whatever they want here. They can go extremely long, extremely short. They got out all those record shorts, and the market only rallied 30 cents, which was really disappointing. So a few of them got short here recently, like 65,000 short. If they look at a chart now, do they say, wow, we're underwater and the chart looks bullish and they start buying? Or was this all a setup this week and they're going to hammer the market back down again? I will say this, from 420 to 430, I think is a place where producers can maybe look to sell some of those extra bushels they have, or bushels that went to town. Because remember, we got the producer out there who was horribly undersold on this crop, and he's going to be selling rallies moving forward.
Yeah, no doubt. I failed to mention we had about 15.5 million bushels of flash sales again this morning on corn. We also had some for beans, and 79 million bushel weekly total for exports. But the question on soybeans right now is this pretty routine, do you think? Or, I mean, are we catching up where we need to be on demand to overcome, especially South America's crop?
Right. You would think with these huge sales, we're catching up, right? And this is bullish. No, we started in such a hole as far as our export pace. We're actually still behind what we normally should have sold as a percentage of USDA's goal. We're behind by about 5% yet. So we're selling beans, but it's the normal volume we do this time of year. It is big bulk, a lot of sales. They're good though. I mean, I don't want to say it's horrible, but boy, with South America's crop coming, Michelle, I'm still worried that eventually at the end of our export window, our season here, we tail off in sales, and USDA might have to lower our export demand 100 million bushels. So some people have it lowered 150 million. I'll go with 100 for now, and that would put our ending stock above 600 million. So as good as everything has been this week, there's still some bearish fundamental news for the soybean market longer term.
Yeah, and you're not the only one talking about those export totals needing to be adjusted by USDA in the long run. And South America, they're getting rains right now, aren't they?
It's borderline perfect down there. We all talked about recently the drought they had, right? But it was their dry cycle, and it lasted a little bit longer than normal. But now it rains the last week, and the forecasted rains are above normal, but a nice mix of sun and rain. Argentina, there was someone there last night talking about how it's near ideal now, a game changer, they were quoted saying. So yeah, we're looking at big crops coming from there. And we know with an election coming, everyone's concerned about, will China continue to buy from us? And the most important thing is they're just going to buy soybeans wherever they're the cheapest. And if Brazil raises a big crop again, they're going to buy from Brazil. So that's definitely my fear moving forward, and why I don't mind pushing the soybean sales here again.
Yeah, and you mentioned the elections. We've had a lot of tariff talk or fear going into these elections. Is a lot of this export business front loaded, do you think? Is that kind of what you were getting at earlier?
You really got to wonder, don't you? If you're China and it's possible that Trump gets reelected, you got to be thinking of trade wars and tariffs, right? So why not just front load and buy them now, especially at these lower prices we've been in the last several years? It was a good point to probably buy. So yeah, I am worried about that.
I'll still mention, let's talk about technicals because we've gotten above at least $10 psychologically, some other resistance areas on the charts. And then we also have option expiration. Are the two tied together?
Michelle, I'm really worried most of this rally this week is tied to option expiration. It might sound silly, but if you notice, like July corn, December corn, November soybeans, when those options come up to expiration that week, it seems like the market does something none of us are predicting. And, Sunday night going into the night trade, everything I read was talking negative, and we were going to be lower on the opening, and we've been higher ever since. Now, we've learned now some better export demand, and I think we've already talked about that probably helped the market a lot. But there's a magnet to these big strike price levels, and $10 was a target I thought could pull options back up to, and now we're here, and we get option expiration all the way Friday. I think next week we kind of go back to, I don't know, what you want to call maybe more of a true market. And it wouldn't shock me with the South America rains that we pull back next week in soybeans then.
And the wheat market is slightly higher, but when you've got corn and soybeans up like they are, you would think wheat would get a bigger push here. Why is wheat not seeing the buying interest that we have in corn and soybeans? I mean, I know exports are not the worst, but they're not the greatest. And so what are we trading?
It's been disappointing, hasn't it, the wheat trade this week? I think what we're trading is a little bit better rain forecast in the Southern Plains. Last week we had some rains hit the Southern Plains, but they're a little further west than we thought. Yeah, but I'm disappointed in the wheat because, we're way past harvest. We should be seeing our post-harvest rally. Maybe the US dollar is holding us back a little bit. Russia, even though they talk about, putting a floor on their price, they're still selling it. At least their exporters are still selling it below that price level. So we're still getting undercut. Exports are good, but wheat might have a bullish story, Michelle, but it might be next spring.
Yeah, I know globally we have a lot of issues that we're watching here. Russia keeps downgrading their crop, but like you said, it's got to translate into sales. And then we do have the dollar, which it's down today, but it has been moving higher. Has that been part of the problem?
I think it is. I mean, really, when exports first popped, it was really because the dollar was down to 100. Now we're at 104, closer to, trending to 105. It looks like a lot of people are saying, and they're talking if Trump does get elected, the US dollar might go to 107. And that's all people smarter than me watching currencies. I don't have the answers there, but we do know a higher dollar hurts our commodities. So if it keeps trending higher, this great pace we've been seeing every week will probably slow down. It's just economics.
And the cattle market is recovering here. Yesterday, it was disappointing. We made new highs for the move and then set back. How much of that was tied to the McDonald's E. coli story? And are we up today? Because usually those don't have very long legs, those stories. Or
I'd say about 98% of it was tied to that story. Yeah,
okay.
McDonald's came out and announced E. coli. But, it could have been from the lettuce. It could have been from onions. You don't know. But any sort of headline like that does make, consumers kind of back off if it's short term. But overall, pretty friendly, this market. So I think your recovery today is just gaining that back.
Okay, so if we get steady, better cash trade again this week, we're up into resistance. Can we take those areas out, do you think?
Probably not the 190 resistance. I think that's what everyone's looking at in these cattle. We're at 188 here today. I think cash cattle can trade higher. I think it's, 188 to 189. It could trade after the cattle on feed report. But even then, it's going to be tough for these futures markets to pop through that. There's just a little bit of uncertainty. The funds have been buyers, and they have plenty of room yet to continue to buy. But I think they're nervous too. We're going to need to see cash probably sharply higher to get through 190, not just the dollar higher or neutral on the week.
And speaking of the funds, boy, they've piled into the hog market. We're into new highs for the move here again. And every pullback gets bought. So what's driving this market? Is it all technical at this point?
Well, the technicals look great in the hog market. And I got to say, I didn't catch it the whole way up. It was kind of odd. We were supposed to have all these hogs coming, right, on the hog and pig reports. And slaughter just doesn't show that they're showing up. And demand has been good and exports have been good. And so the market just keeps grinding higher. Yeah, this is one of those, maybe the funds knew a lot more than some broker in Northeast South Dakota. So yeah, they got me on that hog market there. It's rallied nicely. But the index hasn't really rallied as much with it either. So if you're a producer out there, maybe some put options or some hedge protection wouldn't be a bad idea in this hog market.
Yeah, because this is very contra-seasonal, isn't it?
That's my point, is like, this doesn't make a whole lot of sense from a seasonal standpoint. Now, we're not big hog producers up here, but it doesn't make a whole lot of sense when I look at seasonal charts. So maybe some put options, some protection there.
One last question for you. We've talked about the funds all the way through this discussion, how they've piled into the meats. Now they're kind of slightly short, maybe the grain trade. What's their next move in the greens? Do we know?
That is a great question. I'm concerned with the South America weather. Soybeans don't have that bullish story, so I'm worried they could pile in and go short there. Now, corn and wheat by themselves in a vacuum, I think, have friendly stories. But you and I both know soybeans and corn aren't going to go opposite directions. So I'm worried shorter term, they're actually going to get on the sell side again, go short this market. That's why I don't like paying commercial storage. And then maybe corn and wheat win out next spring. But that's me forecasting a long ways out. We'll see what happens.
All right. Thanks for joining us. DuWayne Bosse with Bolt Marketing. That is Markets Now.